Hello, everyone. Welcome to the first live market outlook of the week. If you're new to these, we do these, try and do these every day of the week at 12:30 UK time. Let me just put the risk warning up while I get started. So what we do in these, we look at the major markets. We look at euro against the dollar, pound against the dollar, a couple of stock market indices, and the price of gold and oil. I was looking earlier this morning really at what last week had ended up like, and it had been a really quiet week in the end. Pretty low volatility. Probably one of the more volatile markets was gold, and it wasn't particularly volatile, but it did move around a lot more than other markets. And just coming into today, I'd noticed in the last sort of half an hour or so, price of oil had fell off a cliff. And here we go. So here we go. So 30, 40 minutes ago, oil was trading around about $57.60. At the moment, it's about $1 lower. And I was trying to think, well, what's happened to move the oil price? So I searched, of course, on that font of all knowledge, Twitter, and here we go. This must be the reason for the move. So Donald Trump, president of the USA, just in case you weren't aware, tweeted 33 minutes ago, oil prices getting too high. OPEC, please relax and take it easy. World cannot take a price hike. Fragile! Exclamation mark. So it looks like President Trump has moved the oil market down about $1 in the last half hour or so. And I wonder if that will be a buying opportunity actually, because we've seen plenty of sort of knockbacks for oil this year, only to see the buyers come back in and lift the market higher. But I thought that was pretty interesting. That's what's driving the oil price today. Right, let's get into it. Let's start off with oil. As I started talking about it because of the president's tweet. Let's take a look. Let's take a look at oil. Let's just remind ourselves where we are with the oil price. So we were at just below 43 in December, $43 a barrel. Last week, it did very briefly hit a fresh recovery high, just shy of $58 a barrel. But you can see, hopefully you can see that on your screens there, how relatively quiet it was last week. These are daily candles that we're looking at, how relatively quiet it was compared to some of the moves that we have had over the last couple of months. And I think we could be getting near crunch time for oil, because it has come a long way. It's moved $15 off the lows, so we've seen more than a 30% rise in oil. We're back up, and I do think 58 to 60 because it's a bit of a psychological level, round number, and the old highs from back here in November last year, mid-November, around about $58. So I suppose if the price is going to run out of strength anywhere, I think we're getting close. So maybe we'll have a bit more of an interesting couple of weeks in oil. Oh, I've seen a question coming about Bitcoin. We'll have a look at Bitcoin today. But if you have any other questions, just type them in the chat box on YouTube. So let's just take a look at things in a bit more depth. Let's flip over to a short-term chart. Here we go. So there's the sell-off in the hour. What's going to be interesting? I mean, so President Trump's tweet, it's, I think, fairly, US markets haven't really started yet, fairly quiet market maybe so far. Is this an overreaction? So I think it's interesting that maybe there's a trading event off the back of this. Is this a real overreaction in the price of oil that we've seen in a reaction to Trump's tweet this morning? So I think there's a couple of ways of playing this. If you thought, well, actually the market's going to knock its way back up towards $58 again, I think the aggressive trade, if we flip this over to a 5-minute chart, I mean, it's still moved lower in the current 5-minute period, but maybe, the aggressive trade is to be a buyer with a stop loss under that low, below $56.50. We maybe want to see it stabilize a bit further, but I think it's going to be an interesting market to watch this afternoon because it has such a slide in the last 40 minutes or so. It doesn't change that bigger picture. We've still got lots of support for oil. We've got the lows from which it has probed below, but the lows around about 56.70. We've got really bigger support running from 55.70 through to about 56. So for me at the moment, weakness in the price of oil still looks like a buying opportunity. Our trend is still just about chugging away. We came out of that correction on the 12th of Feb. when the market moved through 53, and we've seen it push higher. So we've seen it. And it's maybe a reflection of maybe how nervous the market is at the moment after the surge that we've seen in the last couple of months. That a tweet like that can wipe a dollar off the price in pretty short order. But maybe the opportunity is for it to look to go back up towards 58. So I think there's a market to watch this afternoon. So a Twitter-inspired sell-off. Let's see if it manages to make back some ground this afternoon. But for me, it's only if, from a bigger picture point of view, I think it's only if we start slipping through these old lows around about $55.50 that we have to start worrying about a deeper sell-off. So for me, maybe the better trade, if it did tick a bit lower this afternoon towards 56, and we saw the buyers come back in, stops under these old lows and looking for a bounce back. But a bit of volatility in the oil price in the last 45 minutes or so. While we're on the subject of commodities, let's take a look at gold. This was one of the more active markets last week. It felt like the markets as a whole, the ones we look at, felt like a really dull week in the last 2 or 3 days of last week. But gold was moving around a bit. The big picture view for gold, we still have the recovery off the August lows is still going. The price is up, I think, about 15%-ish off these lows at 1160 for gold. That trend is still up. It has been flipping in and out of overbought. Went overbought there beginning of Jan, went sideways for a bit. Overbought there end of Jan, the market did correct, and overbought about a week ago. And again, we've seen a bit of a pullback, but momentum is clearly still strong. However, we do have some hurdles. We've got this really big barrier. I don't think we can underestimate the strength of this resistance up here. So it's the highs from July 2016, around about 1380, and then the highs from September 2017 and the first 4 months of last year ahead of 1370 to 1380 could be, you would expect it to be, a major barrier to any progress for gold. At the moment, we're still about $50 below that. That trend is still up. For my money, I'll still be looking to buy any dips. But even if the price drops down to $12.50, so about $70 lower, $80 lower than we are now, that trend in gold from the August lows is still up. But let's take a look at some of the shorter term stuff. Here we go. So we did see, I did pick up on this, I think last Friday when we were looking. We did the last one of last week. Because the Thursday lows were 1320, and on Friday we'd been about here on the webinar, and we did see a bounce back on Friday afternoon. So in the really, for short-term traders, 1320 is a bit of a line in the sand underneath the price. So again, if I was a buyer now, probably the closest I would want my stops would be somewhere the other side of 1320. You could argue, looking at this hourly chart, if we just take the indicators off for a minute, look at the hourly chart, we had the correction that ran from the 20th of Feb through to the 22nd. That looks to be over with a break that we had on Friday. So for me, it'd be interesting if it ticks back to the mid 1320s. Do we see the buyers come back in? Is there an opportunity to be a buyer with a stop loss under 1320? So for me, oil and gold both still positive. Maybe oil is the more immediate one to watch because of that dollar sell-off that we've seen since 12 o'clock. But on gold, 1320 is really big short-term support at least, and after that, the low 1300s is the really big support before it pushed out to those fresh recovery highs. Let's take a quick look at the pound and the euro. These have been pretty dull markets towards the end of last week. Let's zoom in on the pound. So we'll look at the hourly first, then we'll look at the daily. So for all of last week almost, pound US dollar was stuck, or the second half of last week was stuck in a range. It briefly went to 129.70 and then 131.10 on the top. So it was stuck in like 140 point range for the week. And we're back at the top of the range now. So I suppose if you had a negative view on pound US dollar, it could be an interesting short up here because we know that 131 and a bit has been something of a barrier. On the downside, whenever it drifts back towards 130 or briefly below 130, we're seeing the buyers come back out. But it's all the Brexit stuff. I'm sure, if you had half an eye on the news this weekend, you've seen the Brexit, the latest, I don't know, lack of progress. There's going to be a vote apparently 2 weeks before we're due to leave. So middle of March, there's going to be the vote on the latest deal, which, again, to most of us seems to be leaving it a bit late. The EU have said that if we want to extend it, that maybe we're going to have to stay in until 2021. So there's again, so much confusion and things don't seem to have moved forward. And we're seeing that reflected in the FX markets. Okay, so a really tight few days last week for pound US dollar. So maybe not the most interesting market out there at the moment. If we look at the euro, I mean, we are seeing it's pretty painful to watch. I mean, look at this range. So it's a week pretty much, isn't it? So from last Tuesday, the euro went as low as 113.15 and as high as 113.70. So not even a 60-point range for euro US dollar over 4 days. I can't remember when we had a market as dull as that. Definitely not this year. At least it has been moving about, even though it's been in a tight range. But the range just got tighter and tighter. I think we've just uploaded a video on our channel looking at the year ahead for euro dollar in a bit more depth. But on the downside, we've got 112 has been big support. It's the lows from November. Any weakness towards this 112 level has brought the buyers back out. But I think, as I've been saying all year, it just cannot get a proper recovery going. And we know the Eurozone has got its problems. The Italian economy has gone into recession. The German economy just about missed it. But it's just pretty dull since then. So it cannot really recover in any sort of convincing way. I think if we can break through the highs of last week, if we can get above 114, let's say, I think we've got a chance of another run up to 115. But it's just been a sideways trend now for 4 months in euro dollar, and at the moment there doesn't appear to be much out there to change it. So I'm finding it really painful trying to find opportunities in recent weeks in the pound and the euro, because the ranges have been so tight, because everyone is still watching Brexit and nothing's really happening. So hopefully things will wake up a little bit this week, and they'll get a bit more interesting. But stock markets, in the overnight market, just in case you're not aware, there's a 24-hour market in indices, and it opens on a Sunday night when the Asian markets open. So it opens up around about 11 o'clock on a Sunday night. So this is the S&P. We'll look at the Dow in a minute, but the S&P has, in the overnight market, pushed out to fresh highs for 2019. So it does suggest that we're going to see a positive open today. I think it's maybe on the news of the weekend. President Trump again doing his stuff, saying that the US will not at the moment be imposing any further trade tariffs on China. So that's lifted stock markets ahead of the official open at 2:30 UK time. Big levels up here, though. I think it could be interesting. We've got used this year to these markets just going higher. We see very little in the way of sell-offs. Certainly sell-offs that don't trouble this trend that's been in place now for 2 months, is it? But I think it could get interesting the next couple of weeks. So this is the S&P. The Dow is going to be a pretty similar outlook, but we are back. The highs from October on the S&P, 28.23. The highs from November, 28.19. The highs from December, 28.15. So 28.15 to 28.25. So about 20 points higher than where we are now. This is exactly the level where investors threw in the towel last year, in the last 3 months of last year, on US stocks. This is where sentiment changed and the sellers came out. So if these markets are going to turn around anywhere and take a trip downwards, we are getting really close. Okay, so it's going to be a really interesting couple of weeks. You can see, it has been an incredible recovery since those Christmas lows, but it's been very little in the way of sell-offs. Like I say, overbought mid-Jan, overbought again early Feb, overbought again mid-Feb, and the markets keep going up. So it is really crunch time, I think, for stock markets. Let's take a look at the Dow to pick up on the big levels. Saying all that, I wouldn't be going short yet because clearly they're still going up. These are markets that are still strong. We've seen that strong open in Asia. Here's the Dow. Let's have a look at the corresponding Dow levels. You can see the Dow's at 26,150-ish at the moment. It is just nudging through that December high. Here's our November high, 26, just ahead of 26,300. And then after that, it's the all-time high, pretty much, from October. So it would be quite incredible if after the sort of the carnage in stock markets at the end of last year, they go on to make all-time highs again. I mean, anything's possible. But if they're going to run out of steam anywhere, we're pretty much there. Okay, and you can see again the correspondingly how overbought the Dow has gone on the RSI down here. So at the moment, I would definitely still be looking to be a buyer of dips. So for this afternoon session, we're set for a strong start. But what were Friday's lows? If we did see any weakness, 25,900 was the low at the beginning of the trading day, and also at about 7 o'clock in the evening UK time. So if we see the Dow under pressure, watch 25,900. After that, we've got these lows from earlier in the week. These would have been Thursday's lows at about 25,750. Okay, so we're expecting a sharper open. Maybe we see a bit of selling into that open. If they drift back to these Thursday, Friday lows, I'll be watching for a bounce back. But just keeping a little bit of a wary eye on the bigger picture. There's the hourly chart. You can see the size of the rally. The market's gone up, 4,000 points, 4,500 points nearly from those lows. But let's see what happens. Where we're getting back to where previously investors thought, do you know what? They're a bit overvalued up here. So let's see. Maybe we'll have a bit more of a volatile week this week. Let's take a look at the German index, the DAX. That had gapped higher, I think, this morning. Here we go. Let's zoom it in. So finished on Friday around about 11,460. Gapped higher this morning, 7 o'clock this morning, at 11,510-ish, something like that. Again, driven by this strength in US stock markets overnight, these indices overnight. And again, the German market, we got the highs from end of November around about 11,570. Then we've got these highs, 11,700, and then 11,870. So, it's been a great run this year for stock markets. But for the German and the US, if they're going to run out of steam anywhere, maybe we're getting close. So that's it. So I think stock markets are one to watch for this week. I think that we will see the pound and the euro get a bit more volatility because it has been just so dull over the last few days that it's bound to come back. But stock markets and oil, oil after that sell-off that we saw. But maybe stock markets, I think, could well be the hot market of the week. So just to deal with some of these questions that have come in, if you've got any more questions, fire away. So let's Bitcoin. Bitcoin had, I think, got a bit of traction off that I can't remember what the news was. It was JP Morgan, wasn't it, the other week? Let me see if I can bring it up somewhere. But I think there was some JP Morgan news. Were they launching a Bitcoin fund or something like that? Something to do with cryptos. Here we go. They're getting ahead of the crypto. It's launching its very own digital coin. There we go. That was the news from last week. Okay, so we saw a bit of a blip. Here we go. Bit of a run in Bitcoin, up above 4,000, and then as usual, it's turned around and given that back. So I just think it's still a really dull market. I think from a trading point of view, maybe not from an investing point of view. Clearly, if you thought crypto, blockchain was going to be the future, then you can buy it 85% lower than you could have bought it in December 2017. But from a trading point of view, it just doesn't move. We've got anything above 4,000. The sellers come back in. From 4,000 to 4,500, the sellers come back in. So for me, we need to break that to make things a bit more interesting from the bullish case point of view. But as I always say, when looking at Bitcoin, we go back to these September 2017 lows around about 3,000. That was an important level during the Bitcoin mania. It has, so far at least, proved to be an important level on the downside. So if you thought, if someone said to me, right, you've got to buy Bitcoin now, I would want my stop loss the other side of 3,000, which for Bitcoin is 20% away from where it's trading, but it's a volatile market even when it's quiet like this. So you need to give things room. So let's keep coming back to it. I think if it can build above 4,500, we can start building a much better case for recovery. But at the moment, if we flip this over to an hourly, it has a go, and we just look at these weird moves that last for an hour or two, and does nothing for ages, and then again, sharp move, does nothing. We've seen the same thing again over the weekend. Okay, so yeah, still a bit dull for me. If it gets above 4.5, things get more interesting. Let's see. Let's see what happens. Okay, we'll keep coming back to it. What do you think of the big US indices? We did that, so we had a look at those. Still strong, still be a buyer on dips, but just maybe a bit wary up at these levels, because we're back to where we were end of last year. And high-grade copper, someone's asked for. Let's have a look at copper. Spot, I've got copper spot. I'm guessing that's going to be pretty much the same, isn't it? Let's have a look at that one. Let's have a look at the dailies on copper. That's interesting, isn't it? You do well at picking out these interesting markets. That's Nicholas who's asked this question. That is an interesting one. So let's go right back in time. So we had this massive. Where's that downtrend start? So this downtrend from 2011, from wherever it is, is that 45,000, all the way down to was it 4,500, whatever it is, from 45, 46 down to 2. So a big sell-off in the price of copper. I really should know what it's quoted in, I know. And then we had this recovery, and we've had, and what is interesting is how it's moved, I think, since August of last year. So let's pick up on that. So we had the lows in August. I'm guessing, is it being driven by dollar strength? Maybe the lows in August, 25 and a bit, back down to it in January, holds and recovers. So this is something of a breakout, isn't it, in the price of copper? That's interesting chart. So for me, the fact we've cleared these old highs that go right back July, September, December, Feb, that's a pretty bullish move in the last week for the price of copper, isn't it? So for me, that's a breakout. And the strategy I would be looking to do now is looking to buy any dips, because it looks like it's the start of a recovery. How high could the recovery go? Well, I think the obvious target would be a run back to the 2017, June 2018 highs. Any sell-offs, we got short-term support before the breakout around about 27.40, that sort of level. It's a really interesting one. That copper, with the backdrop of markets being fairly boring the last few days of last week, copper clearly wasn't. So yeah, it looks like a major break and maybe the start of a new recovery. Obviously no one's got a crystal ball, but the price action definitely this year, first of all, holding above those lows from last year and then breaking out through these highs is a bullish one. Okay, that's it then, isn't it? There's another one to keep an eye on. Okay, there's a new one. We'll come back to that later this week and see how it's doing. So for this afternoon, we're expecting stock markets to open higher. Any sell-off still looks like a buying opportunity. We've seen, if you missed the beginning, oil has dropped a chunk in the last hour because of a tweet from on the face of it from President Trump, and it's still weakening again. Let's wait to see where it stops. I think this could be interesting this afternoon, this oil price. So it's moved on President Trump saying it's too expensive. We have got a lot of support for oil from last week, from $55.50, so about 90 cents below where we are now. So I think that could be an interesting market to watch. Alternatively, if it goes crashing down, Mr. Trump has called the top in oil. Let's see what happens in this area this afternoon. So oil and stock markets are ones to watch, I think. Right, we will wrap things up there. As usual, we'll come back and do this all tomorrow. 12:30 tomorrow. We'll see what's going on, see what happened with the oil price, see how stock markets fared after being expected to open for fresh 2019 highs. And any questions, feel free to drop me an email, david.jones@capital.com. To open an account you can go to Capital.com, open a demo account, and have access to all the charts and stuff. Open a real account and trade this stuff. And that's it. So thanks for the questions. Thanks for the comments. Thanks for coming along. Make sure to have a look at the Euro video we uploaded a bit earlier today. It's an 8-minute look at what the year ahead could have in store for Euro US dollar. And we'll do it all again tomorrow at 12:30. To never miss out, if you just click the subscribe button down there on YouTube and the alarm bell, you get a push notification off YouTube whenever we go live. So we'll do it all again tomorrow.